Welcome back to the Pro Ticker Podcast. It's Thursday morning, and as usual, we've got all the major financial news for you.
You said it.
This week, though.
This week's a doozy.
Yeah, it has been, especially with the U.S. presidential election. Finally, behind us, we're seeing some serious ripples in the global markets.
Definitely seeing some shockwaves.
So today we're going to do a deep dive on 5 major stories you absolutely need to know about.
You need to know.
We've got articles from
Let's hear it.
Bloomberg, CNBC, Yahoo Finance, UK Market Watch, and the Wall Street Journal.
Wow, the whole gang's here.
It's going to be a wild ride, so buckle up.
Always a wild ride, but especially this week. It's a fascinating time to be keeping an eye on the markets, that's for sure.
Absolutely. All right, let's jump right in. Yahoo Finance UK is reporting that the Bank of England has gone ahead and cut interest rates.
Again.
For the second time this year,
Wow.
bringing them down to 4.75%.
4.75%.
Now, this comes right after inflation eased to 1.7%, which dips below their 2% target.
They're below target now, huh?
So what do you think the strategy is here?
Well, it seems like the Bank of England is erring on the side of caution. You know, they're calling it a gradual approach to stimulating the economy.
Right.
It's like they're trying to carefully add fuel to the fire,
I see.
encourage growth without letting inflation get out of control.
Yeah, that makes sense. But I'm seeing here that inflation isn't their only concern.
What else are they worried about?
Yahoo Finance UK also mentions rising employment costs as something they're keeping a close eye on.
Oh, yeah, that's a big one.
So what kinds of things are they factoring in there?
Well, they're looking at things like the recent increase in national insurance contributions.
For employers?
Yeah, for employers.
Yep.
And also the minimum wage hikes.
Okay.
All of those can push up the cost of hiring.
Right.
Which can then snowball throughout the economy.
Makes sense. So for our listeners out there, what's the potential impact of all this? Like, how does this actually affect them?
Yeah, good question. Well, cheaper borrowings is definitely a good thing for businesses looking to invest and expand.
Sure.
And on a personal level, it could mean lower interest rates on loans.
Ooh, that's nice.
Yeah. So if you've been thinking about buying a house or refinancing, now might be the time to really crunch those numbers.
I like it. Okay, now let's shift gears and head over to China.
Ooh, China, always interesting.
Bloomberg is reporting that in the wake of Trump's victory, China has set its daily reference rate for the yuan at its weakest point since late 2023.
Huh, since late 2023.
Okay. And with Trump's campaign promises of tariffs on Chinese goods still looming, what do you think is behind this move?
Well, it could be a strategic play by China, to soften the blow of those potential tariffs.
So interesting.
By letting the yuan weaken, they're essentially making their exports cheaper.
I see.
More competitive on the global market.
That's a smart move.
Yeah.
A pretty effective counter move.
It is.
But Bloomberg also mentioned some other tactics that China might be using, right?
Oh, yeah, they've got a few tricks up their sleeve.
Like what?
Well, for one, Bloomberg mentioned that state-owned banks have been selling dollars, trying to stabilize the yuan.
Right.
And then there's also talk of potential stimulus measures from the National People's Congress to, help boost the economy.
So they're really thinking ahead.
Oh, yeah, it's like a game of chess, China's being very deliberate with their moves.
Well, it sounds like nobody really knows for sure how this will all play out.
Yeah, there are definitely differing opinions among the experts.
What are some of those?
Well, some believe that China will just tolerate further depreciation of the yuan.
Okay.
While others are predicting a more aggressive response if those tariffs actually happen.
Got it. It'll be interesting to see what happens.
Very interesting.
Now, speaking of strong opinions, let's move on to Market Watch.
Ooh, what have they got?
We've got legendary investor Stanley Druckenmiller sounding the alarm about inflation.
Oh, really?
He's worried that the Fed might be celebrating victory a little prematurely.
Stanley Druckenmiller, huh?
Yeah.
Well, his argument's definitely worth considering,
Right.
This is the guy who was George Soros's right-hand man.
Oh, wow.
So he knows a thing or two about market cycles.
He's been around the block.
He has, and his concern is that we might be repeating a pattern from the 1970s.
Okay.
Back then, inflation seemed under control, but then it came roaring back.
Oh, no.
Yeah, and he sees some parallels in today's market.
So what are some of the specific things that have him worried?
Well, Market Watch highlighted a few factors.
Okay, let's hear them.
He pointed to things like tight credit spreads.
Okay, and remind me, what are credit spreads again?
Right. So credit spreads are basically the difference in yield between safe and risky investments.
Okay.
And when those spreads are tight, it often means investors are getting complacent about risk.
Ah, I see.
He's also worried about the rising price of gold,
Makes sense.
which is a classic safe haven asset, you know?
Mm-hmm.
It tends to do well during inflationary periods.
Right, and then there was one more thing, right?
Oh, yeah. And finally, he cited the robust equity market as another potential red flag.
So for our listeners out there, why should they care about any of this?
That's the million-dollar question, right?
Right.
Well, if inflation does make a comeback,
Mm-hmm.
it could really eat away at the value of your savings and investments.
Well, that's not good.
No, it's not. Think of it this way. If prices go up, but your income stays the same,
You're losing money.
yeah, you're effectively losing purchasing power.
That is a scary thought.
It is.
It's a good reminder that we can't just assume inflation's gone for good.
Exactly.
We got to be ready for different possibilities.
Be prepared, always.
Okay, now for something a little more electrifying.
Hit me.
CNBC is reporting that Tesla's stock is surging.
After Trump's win?
Yeah, following Trump's win.
That's surprising.
It is. So what's driving this unexpected boom?
Well, this is where things get interesting.
I like interesting.
So on the surface, a Trump presidency might seem like a negative for the electric vehicle industry.
Okay, I could see that.
There's been talk of potential cuts to EV subsidies,
Right.
which would hurt the industry's growth.
Yeah.
But in Tesla's case,
Huh?
it might actually be a positive.
Wait, really? Explain that one to me.
I know it sounds counterintuitive, right?
Totally.
But Tesla's size and market dominance
Okay.
give them a unique advantage.
How so?
They're not as reliant on government subsidies as their smaller competitors.
Ah, I see.
So a non-subsidized environment might actually weed out some of the weaker players in the EV market.
This is like survival of the fittest.
Exactly. And that leaves Tesla with an even bigger slice of the pie.
So they're strong enough to stand on their own 2 feet, even without government help.
That's the idea. Plus, CNBC also mentioned the potential impact of Trump's tariffs on China.
Oh, right.
If those tariffs go through, it could really hurt competition from cheaper Chinese electric vehicles.
So it's like a double whammy for Tesla's competitors.
You got it.
It sounds like Tesla's a case where a perceived negative for the sector could actually create a really unique opportunity.
It's a great point. It just shows how important it is to dig deeper
Yeah.
and look beyond the headlines.
Absolutely. All right, let's zoom out now and take a look at the global investment landscape.
Sounds good.
The Wall Street Journal is reporting that Trump's victory, and particularly his stance on China, is already influencing investment flows.
Makes sense.
What kind of shifts are we seeing?
Well, there's a growing sense of caution around Chinese assets.
Okay.
That possibility of tariffs is creating a lot of uncertainty,
Right.
and investors don't like uncertainty.
Makes sense.
Yeah.
So are investors just pulling out of China altogether, or are they shifting their focus?
It seems to be a little bit of both.
Okay.
While some investors might be reducing their exposure to China, others are looking for opportunities elsewhere.
I see. And are there any clear winners emerging?
Well, the Wall Street Journal highlighted 2 countries that are attracting a lot of attention:
Which ones?
India and Japan.
Okay, what's going on with India?
Well, India is being seen as a potential alternative to China for manufacturing. And their domestic-driven economy is also seen as really appealing.
Especially in times of global turmoil.
Exactly.
Makes sense. And what about Japan? Why is it attracting investment?
Well, Japan stands to benefit indirectly from Trump's policies.
Okay, well,
The potential for a strong dollar and a weaker yen.
right.
That's good news for Japanese exporters.
Right, sure.
It makes their goods more competitive globally.
So we've covered a lot of ground here.
We have, from the Bank of England to China to Tesla
Yeah, from interest rate cuts to strategic currency moves
to inflation warnings.
and the shifting global investment landscape.
It's clear that we're in a period of major change.
Absolutely. The financial world is definitely reacting to the new realities of a Trump presidency.
It is, and I think what's really fascinating is that we're only seeing the beginning.
Yeah, just the tip of the iceberg.
Yeah, the full impact of these policy shifts and geopolitical developments, it's going to keep unfolding in the weeks and months and even years to come.
It's going to be a wild ride.
A wild ride indeed.
A dynamic situation that demands our attention, for sure.
Absolutely. Yeah, it's going to be fascinating to see how it all shakes out. But speaking of things that are going to be fascinating,
Yeah.
the Fed's interest rate decision,
Oh, yeah. Everyone's on edge about that.
CNBC is reporting that they're expected to announce a rate cut later today.
Today.
Yeah, later today. And the big question is, how will Trump's win factor into their decision.
Right, because initially everyone was expecting a quarter-point cut.
Right, just a continuation of the easing cycle they started back in September.
Exactly. But now with Trump's policies potentially changing things.
Throwing a wrench in the works.
Yeah, things are much less certain.
For sure. And what's interesting is that traders are now betting on fewer Fed cuts in the coming months.
Oh, really?
Yeah, it seems like they're thinking that Trump's policies might actually lead to stronger economic growth
Okay.
and maybe even a resurgence of inflation,
Right.
which would make the Fed hesitate to cut rates too aggressively.
That makes sense, especially considering what Druckenmiller said about inflation potentially making a comeback.
Yeah, exactly. The last thing the Fed wants is to fuel inflation by cutting rates too quickly.
Right. So they're walking a tightrope here.
They are. They need to balance supporting the economy with keeping inflation under control.
Yeah, not an easy task.
And with Trump's policies adding another layer of complexity,
Oh, yeah.
it'll be interesting to see how they navigate all of this.
I'm really curious to hear what Jerome Powell has to say during his press conference.
Me too.
Will he acknowledge the potential impact of Trump's policies? Will he hint at how the Fed might change course?
Yeah, it's a must-watch event for anyone who's interested in the markets.
Absolutely. It's a good reminder that the world of finance never stands still,
It doesn't.
and we need to stay informed and be adaptable if we want to make smart decisions.
Couldn't agree more. Okay, so for our final headline today, let's go back to the topic of global investment shifts.
Sounds good.
Bloomberg is highlighting how Trump's win is impacting investor sentiment towards different markets.
Yeah, there's definitely been a lot of talk about that.
There has.
Yeah.
And it seems like there's a growing concern about the risks of investing in China.
Okay.
Given Trump's stance on trade,
Right.
investors are always cautious about putting their money into situations with a lot of uncertainty.
I can't blame them. So are investors just pulling out of China completely, or are they shifting their focus to other markets?
It seems like it's a bit of both.
Okay.
Some investors might be reducing their exposure to China,
Mm-hmm.
but others are looking for opportunities elsewhere.
Interesting. And where are they looking?
Well, based on Bloomberg's analysis, it looks like India and Japan are emerging as potential winners.
Huh. It's amazing how geopolitical events can have such a huge impact on the financial world.
It is. One country's loss can be another country's gain.
And investors are always trying to adapt to the changing landscape.
Right, and this highlights the importance of diversification.
Oh, yeah, that's a good point.
By spreading your investments across different markets and asset classes, you can potentially reduce the risks associated with any single event or policy change.
That's great advice. So to sum up, it seems like the key takeaway from all of these headlines is that we're in a period of major transition.
We are.
The global financial landscape is being reshaped.
By political events, economic trends, investor sentiment.
It's a time for caution, but also a time for opportunity.
It is.
And it's more important than ever to stay informed and be prepared to adapt.
I couldn't have said it better myself. It's going to be interesting to see how these trends play out in the coming weeks and months.
Well, one thing's for sure.
What's that?
We'll be back tomorrow morning
With more headlines.
with brand new headlines from all the major financial magazines.
Can't wait.
Yeah.
Yeah, it'll definitely be interesting. And while we're talking about being adaptable,
Yeah.
let's switch gears for a second and talk about a market that's well known for its volatility.
Oh, I know where you're going with this.
Cryptocurrency.
Of course, cryptocurrency.
Yahoo Finance UK has an article about Bitcoin
Oh, yeah, Bitcoin.
and its surge following Trump's victory.
It's surging.
Yeah, surging. Some analysts are even predicting that it could hit $100,000 by January.
Whoa, $100,000 by January.
Oh,
That's a bold prediction.
it is. That's sure to turn some heads.
Yeah, that'll get people talking. But what's fueling this Bitcoin frenzy?
Well, it seems like a few things are happening all at once.
Like what?
First, there's this growing belief that Trump's stance on crypto could be good for regulation.
Yeah.
Maybe a more favorable regulatory environment.
Right. Remember he talked about potentially replacing SEC Chair Gary Gensler,
Oh, yeah.
who's not exactly known for being crypto-friendly.
Not exactly.
Yeah.
And then there's that whole idea of a national Bitcoin reserve.
Oh, yeah, he floated that during his campaign.
He did. If that were to actually happen, it would be huge for Bitcoin.
It would legitimize it as a strategic asset.
Exactly. And that could send its value through the roof.
Wow. So we've got political optimism, potential policy changes, and what else?
Oh, and Yahoo Finance UK also mentioned that technical analysts are pointing to recent trends in Bitcoin ETF accumulation as a sign of growing institutional interest,
Interesting.
which could really add fuel to the rally.
So it's a perfect storm for Bitcoin.
It kind of is, but as always,
Gotta be careful.
gotta be careful. The crypto market is volatile,
Very volatile.
and predictions should always be taken with a grain of salt.
Good advice.
Yeah.
Still, it's an exciting development to keep an eye on.
Oh, yeah. Especially for anyone who's already invested in Bitcoin.
It's a good reminder that the world of finance is full of surprises,
It is.
and that sometimes the most unexpected assets can deliver the biggest gains.
You never know.
So as we wrap up this deep dive into the post-election financial landscape,
Yeah.
what's the key takeaway for our listeners?
Well, I think the overarching theme here is uncertainty.
Uncertainty.
Yeah. From the Bank of England's cautious approach to interest rates to China's careful currency moves.
Right.
From Druckenmiller's inflation warning.
To Tesla's surprising boom.
We're seeing how political events and economic trends are creating a real sense of unease in the global markets.
Definitely. But also opportunity.
Absolutely. It's a time for caution, but also strategic action.
Couldn't have said it better myself. We need to stay informed, be adaptable, and make sure our financial decisions align with our goals and risk tolerance.
That's the key. And the financial world never sleeps.
It doesn't.
So we'll be back tomorrow morning with fresh insights and analysis.
To help you navigate the ever-changing market dynamics.
Exactly.
That's right. We'll see you all tomorrow morning with new headlines from major financials magazines.